All right, so I have two past questions of ACCA, and the questions are what you can see on the screen. So, the first question, that happens to be question number 4 here, is asking us for the adverse material price variance. So, if we can check it out. So it's saying, what was the adverse material price variance? And the second question, which is question number 5 here, is asking us for material favorable usage variance. So it says, what was the favorable material usage variance? So these are the two questions. So what topic are we looking at in this video? The topic is basic variances. So there are quite a number of variances, but the coverage of this video is going to make do with material variances. And for these material variances, we are looking at material price variance, material usage variance, and material total cost variance. Okay, so how do we solve these two ACCA questions? Well, let's get some definitions, let's get some principles that will drive the solution of these two questions. So, keeping it nice and simple, variance, I have defined here that variance is the difference between what we planned or what we budgeted to achieve and what we have actually achieved. Okay, now the other thing you need to know is that when you have your variance, which is the difference between what you have planned to achieve and what you have actually achieved, so that variance is going to be the outcome of the exercise. And then the difference, which is the variance, could either result in favorable outcome. If this is a favorable outcome, it means the outcome is better than the expected, which is good news for the company, or if you like, the buyer. Okay, good. Now, what happens if the outcome is adverse? Well, it means the outcome is worse than expected. And then this time around, the outcome is going to be bad news for the company. Okay, now we also need to understand the difference between budget and standard. So a couple of things to understand here. So a budget includes information for more than one unit. So in your budget, you have more than one unit. And I'm going to show you a Mickey Mouse example regarding this. Whereas a standard refers to information related to a single unit. Please, I need you to pick the difference. So this one is saying more than one unit, whereas for standard is saying information related to one single unit. Okay, neither budget nor standard contains actual figure. So the actual figure or those actual figures will be different from the figure of budget and the figure of standard. Okay, because in your actual information, you do not have budgeted information, neither do you have standard information. So your actual information will always be actual. And then in your budget, you do not have in your budget actual information. In your standard, you do not have actual information. Okay, a standard can be found within a budget. So in your budget, you can find your standard. But in your budget, in your budget you can find your standard. But in your standard, you cannot find your budget. So it says that a standard can be found within a budget, but a budget cannot be found within a standard. I'm going to demonstrate all of this to you. All right, and we have this other part that says when calculating material variances, you do not need budgeted figures. Instead, you only require the standard information, which is going to be the expected cost or usage per unit. And then your actual information is going to be the real cost or the usage actually recorded. All right, so before we go any further, can I just tell you that my name is Ayorinde Temitope, and you can reach me via the WhatsApp number +234 803 385 1555. The email address is ayorinde@tt5097 gmail.com. So if this video is found to be useful, please don't forget to like, share, and comment. Also, I will need you to turn on the notification bell so you'll be among the first to see my next video. Oh, okay. So before we solve those two questions, I have a Mickey Mouse example for you here. So let's just understand the concept of budget and standard very well. So imagine a company is planning to buy 10 units of an item. And then these 10 units of a particular item, the company planned to spend $20 for each unit. So imagine you are the procurement manager, and then you are told to buy 10 units of a particular item, and then you must not spend more than $20 buying one unit. Okay, so what is this telling you? It means as you are going for these 10 units, you know that the budget for the 10 units is going to be $200, meaning that you are not expected to spend more than $200 to buy these 10 units. So at this point, you've not bought the item, but you have your plan, your budget to reach $200 for this 10 unit of item. Okay, so what happens if you get to the store or where you are to buy, and you now imagine you find out that the actual price for each is $18. So that means the price is cheaper, and because the price is cheaper, you are even considering buying more than 10 units. So you want to buy 12 units. So you want to buy 12 units, and then each is $18. Okay, so how much are you going to spend regarding these 12 units? So it's going to be 12 multiplied by 18, and that will give you $216. All right, so let's extract some information out of there. So if we go back to our budget, you see this part that is talking to us about $20 per unit. It is our standard. And then the $200 here is our budget. So your budget has in it more than one unit. So the $200 you see there is your budget, and it has in it 10 units. However, the standard is $20 per unit, and you cannot find this $200. You cannot find $200 in the $20. So it is correct to say now that you cannot find your budgeted information in your standard. The same way you cannot find this $200 in $20. However, you can find your standard information in your budget. So you can find $20 in your budget of $200. So very, very important you understand this. So there's a difference between the word standard and budget. Now, standard is talking about what we plan to achieve per unit, whereas your budget is what we plan to achieve for more than one unit. Okay, so please, I need you to understand that. So both the standard and budget, they are talking about information that we've not actually achieved. And that's why you can see that the actual information is different. So the budget was to buy 10 units, but the actual information is saying, oh, because the price is cheaper, let's buy more. So the actual unit is 12. That's 12 units. And then the actual selling price per unit is $18. And then the actual dollar paid for those 12, we have this to be $216. Oh, okay, good. So that this other bit I need you to understand. So what happens if we are to calculate the material price variance? So the material price variance is just going to be this. Ask yourself, what's the difference between the standard, which is $20, and the actual price paid per unit, and that is $18? Of course, you have it to be $2. So it means on each unit purchased, you have savings of $2. And because the actual unit is 12, now your total variance regarding these 12 units, so is going to be this. So let's put that down. So material price variance. So this is going to be the $2. How do we get this $2? So 20 minus 18 multiplied by the 12 units, and you have this to be $24. Okay, now the other bit now is this 24, which is the variance. Is it favorable or adverse? So in this Mickey Mouse example, I'm sure you are saying it is favorable. Why? Because the actual price of $18 per unit is cheaper than the standard price of $20. So it means on each unit, we have savings of $2. And then on the 12 is going to be 2 multiplied by 12. So we have this $24 to be favorable. All right, so that's is that about it? So there you have it. This is just a Mickey Mouse example. So what we're going to do now is to use this knowledge to solve those two questions. So what I'm going to do is to copy those questions to where I'm going to have the flexibility of dissecting them very well. So first thing first, let's attend to this one first, then we'll come back to the older question. So what we're to do is this. So let's get the information right. So it says the following information relates to questions 4 and 5. A company has a budgeted material cost of $125 for the production of 25,000 units per month. So what is this telling us now? Well, what this is telling us is this. The information is telling us that the company has a budget that says produce 25,000 units. So 25,000 units. And the total cost of production, that's talking about total material cost of production. Budgeted material cost should be $125,000. For how many units? For 25,000 units. Okay, so a question for you. What do you think will have been the cost per unit? So what you need to do now is to say that 125,000 divide it by 25,000 units, and that's going to give us 5. So meaning that the company planned to pay $5 per unit. So for each unit, the plan was to pay $5. Okay, good. Remember, the company is the one buying the raw materials. Good. All right. So we have this. The continuation of the story says that each unit is budgeted. Each unit is budgeted to use 2 kgs of material. Okay, so what this is saying now is this. So this information is going to the people in the production department. So we are telling them that, guys, if you are to produce, use 2 kgs to produce 1 unit. Okay, and then it goes further to say the standard cost of material is $2.50 per kg. So now look at this. This is at $2.50 per kg. I need you to understand this bit because there are students that will have issues with this. There's a difference between dollar per kg and dollar per unit. So imagine you have to produce a particular soft drink, and then in it there should be 2 cups of sugar. So there should be 2 cups of sugar, and then to buy 1 cup of sugar, it will cost you $2.50. So that means since a bottle of this soft drink must have in it 2 cups of sugar, so how much are you expected to spend on these 2 cups of sugar? So if you take 2 kgs to be 2 cups of sugar, so it means for each cube of sugar you have to pay 2.5. So if you say 2 multiplied by 2.5, you have this to be $5, and this is going to be $5 per unit. What unit? So from the end of the company buying the raw materials, by the time they are done buying the raw materials, now they will turn the raw materials into bottles of this soft drink, and in each of these bottles there must be 2 cups of sugar. So the unit here, the $5 per unit here, is talking about the cost of the material in 1 bottle of this soft drink. So since there will be 2 cups of sugar in this bottle, so a unit to the company is going to be a bottle, and there will be 2 cups of sugar in that bottle. So it's going to be $5 per unit. So there's a difference between $2.50 per kg and $5 per unit. Okay, so I'm going to break this into 3, and you probably see what I'm trying to achieve with this. So I want to break this into 3. So what are the things I want to break this into? So I have there one thing, I have there another thing. Okay, so let's get to define this. So the one that is talking about the quantity of the material needed to produce 1 unit, let's refer to this as the usage. And then the one that is telling us the dollar per kg, let's refer to it as the price. How about $5 per unit? Let's refer to this as the total. Okay, all right, that is looking fine. There's this other thing I need you to take note of. So if I go back to our usage, on top of this usage, you have 2 kgs, and I just want to put a standard. You see what I need to achieve with that. And then the actual here, I want to the unit, I want to put actual there. So that is actual. So please be mindful of this. So I have on top of the 2 kgs standard, on top of units, I have the actual. So I want to do the same thing here. On top of this 2.5, that's coming to the box of price, I'm going to have, let's do it in a way. Okay, so this is standard, and then this is actual. I'll do the same thing here. This is standard here, and this is actual. Why am I doing it this way? You get to know very soon. Okay. All right. So the other bit now is talking to us about actual materials in the month. So actual materials in the month cost $136. So let's come here and say actual material cost. So we have this to be $136,000. Okay, now the other thing we're told is saying for 27,000 units. So that's the actual unit of production. So actual units produced, we have this to be 27,000 units. Okay, what else? We also told that 53,000 kgs were purchased and used. Okay, so I need you to take note of this: purchased and used. So in some other situation, you could purchase 53,000 kgs and you might not use everything. So that means you'll be having some closing inventory left. But in this case, we do not have any closing inventory. So we purchased 53,000 kgs and we used everything in that particular period that we're reporting for. Okay, so that's kgs. Let's call that material. So that's our actual material. So we have that to be actual material. So the actual material is 53,000 kg. So this is 53,000 kgs. All right. So what do we do? First thing first, please, you do not need budgeted information. So this part that is talking about 25,000 units as well as $125,000, please discard them off. You don't need this. You don't need this. Okay, because you are not going to be comparing budget with actual. Instead, it's going to be your standard actual that you are going to be comparing with the actual information. So please, and the reason is this, is simple. So you have $125,000. In your $125,000, you plan to produce 25,000 units, whereas you actually spent $136. How many units do you have in this $136? You have 27,000. 27,000 units. So you cannot be comparing the cost of 25,000 units with the cost of 27,000 units. That will be out of it. So it has to be you comparing apples with apples. oranges with oranges, not that you'll be comparing apples with oranges. So it will not work out that way. So, and then what about these 25,000 units? The 25,000 units, that's not the actual information. So the actual information is 27,000. So you see now, that $125,000 is not relevant. 25,000 units not relevant. So what will be the relevant information here? You need the standard and the actual information. So what's the standard? This is the standard. The standard is what I have here. Some textbook writers will refer to this as the okay, so you can call it standard, okay, but you can also call this cost card. So your standard information is all of these boxes, so you can call it cost card. So your cost card is saying $2 per 2 kgs, I should say, sorry, 2 kgs per unit at $2.5 per kg, and then this will give rise to $5 per unit. So that's your cost card. So you have your standard information here, and you also have your actual information here. So what you need to do is to pick out the cost card, which is the standard information, and then extract the actual information. So these are the two things that we're going to use to solve the two questions. So let's go and attend to the first one that says material price variance. So to do justice to that, you head it up first. So material price variance. So come in, head it up, and then the first thing I need you to do is to write flexed. So what is flexed? Well, flex is just talking about the standard actual. Open a bracket like this. Since it is price that we are looking at first, so you need to come to this box. You need to come to the box of price in our standard information or cost card. So what am I going to do now? So this is where this matters to us. The standard that I put there is saying 2.5. So write it. So $2.5. And then you multiply. Multiply by what? You are to multiply by, look at it, the actual kgs. So what's the actual kgs in this question? Our actual kgs, look at it, 53,000 kgs. So come in and multiply by 53,000. So I need someone to quickly multiply this and give us the answer. Please help us to put the answer in the comment section. Yes, what do you have? 2.5 multiplied by 53,000. Yes? Anybody? All right, thank you. So this is going to be 132,500. So what's the implication of this? Well, what this is telling us is this, that those 53,000 kgs that we purchased, if we are to buy them based on the standard set by the management, because the management says buy 1 kg at the price of 2.5. So based on what the management set in the cost card, those 53,000 kgs, we should buy them at $2.5. Each should be at $2.5. So meaning that the 53,000 kgs should cost us 132,500. 500 watts. Okay, this is another area where some students could have an issue. So please come in. You have $8. So that means this is going to be in dollars. Okay, good. The other thing now is we want to compare this 132,500 with the actual results. So what's the actual results? Okay, so the actual results is going to be the actual dollars. So the actual dollars in this question is this. So you compare that with it. So which is 136. All right. So it's a case of spend 132,500 on those 53,000 kgs, but you have spent more than that. So it means the result is not going to be a favorable one. So what do we do now? We'll say 132,500, compare that with 136,000, and that's going to give us 3,500. So this is 3,500. Good or bad? Bad. Why is it bad? We have spent more money than the cost card is saying. So because it's bad, so you say this is adverse. Okay, now you pull it down like this. The other thing you could probably do is to come in and ask yourself that how much did purchasing manager pay per kg? Well, you can do the maths. So if we ask you to buy, or if you have purchased 53,000 kgs, so let's work it out. So it will have been, you spent $136,000. So let's divide this by 53,000 kgs. 53,000 kg, so that we can know the dollar per kg. And what will this give you? So if you use your calculator at this point, it will have been 136,000 divided by 53,000. I'm sure you know that this is going to be 2.56603,774. So obviously this is more than 2.5. So per kg you have spent more. So if I put down what I have on my calculator, so this is saying 2.56603,774. Okay, so it means you spent more than $2.5 to buy 1 kg. All right, so from what you have on the screen of the calculator, please deduct 2.5. Now that's going to leave you with 0. 0 point what? Yes, anybody? So this is going to be 0.06603,774. Okay, so this is the additional price paid per kg. But our friend did not buy just 1 kg. So he bought 53,000 kgs. If you multiply this by 53,000, what would you get? So everything on your screen, the screen of your calculator, multiply it by 53,000, and that's going to give us 3,500. So 3,500. So these guys spent more, and it will be adverse. Okay, so I'm hoping this is something you can relate with. So our friend paid a price of 2.56603,774. Okay, that was what this guy paid per kg. So on each kg, he overspent by 0.066037774. But he did not buy just 1 kg. He bought 53,000 kg. So multiply that by 53, you have it to be 3,500. So he overspent by 3,500. And to the company, that says adverse. So what do? You come to the options and you select 3,500. And remember, from the requirement, you have been pre-informed that is going to be adverse. Okay, so that is it. All right, so let's move on to the second one. So I'm hoping this is not something that is difficult for you, but in case you are finding it difficult, please put your concern in the comments section so that I can get back to you with the explanation that you probably need. So let's go back and pick the other requirements. So the other requirements is asking us, so this is the other bit that we need to do here. So the other bit still the same question, but the difference, we have a different requirement at this point. So so this is saying we should determine the favorable material usage variance. So material usage variance is what we need to do at this point. So head it up. So call it material usage variance. So what would you do first? Well, come in and say flexed. Flex is standard actual. So again, we'll go back to the cost card. We have our cost card there, and for usage, we need to pick the standard, which is 2 kgs. So let's drop that. So 2 kgs, let's pick it, 2 kgs. Then you multiply by what? You multiply by the actual units. So what's the actual unit in this question? Actual unit produced, we have this to be 27,000. So let's drop that 27,000. So you have this to be 27,000. Okay. So what would this give us? Now, you need to multiply. I'm sure my grandmother can do this because she will tell you this is going to be 54,000. So you have this to be 54,000. But hold on a moment. 54,000 watts. Is this dollar, units, or kgs? And then the answer to that is this. Please come in. So this is kgs. So you need to come in and say this is in kgs. All right. So you need to compare this 54,000 kgs with the actual kgs. So the actual kgs. From the question, the actual kgs is 53,000. So let's put that down. So this is 53. Okay. So it's a question of use 54,000 kgs to produce 27,000 units. But you ended up producing these 27,000 units and you have used 53,000 kgs. So you need to understand here that the more actual materials you have used, the more costs the company will have to pay or incur, as the case may be. So now it means the people in the production department, the management expected them to use 54,000 kgs of the raw materials to produce 27,000 units. But tell you what, they produced those 27,000 units, making use of 53,000 kgs. So it means they have helped the company to save some materials. And then the quantity saved by the labor or the people in the production department is going to be 1,000. So 1,000 kgs of raw materials. Okay, now we cannot stop here because all variances must end up in dollars if this will make some meaning to us. So what do? You need to go back to the cost card and ask yourself, how do we turn these 1,000 kgs into dollars? So the difference is in kgs. Ask yourself this question. If we were to buy those 1,000 kgs, the management will approve what dollar or what price? Okay, so you need to come here and pick dollar per kg, not dollar per unit, because the difference is in kg. So to turn the 1,000 kgs into dollars, please bear in mind it has to be $2.5 per kg that you are going to use. So at this point, you need to come here and say multiply by $2.5. And if you multiply this out, you should have $2,500. So it has turned into dollars. We want to ask the question, this 2,500, adverse or favorable? Well, it's favorable. Why is it favorable? Because the labor they helped to save 1,000 kgs of materials. So the production department should have used 54,000 kgs of the raw materials to produce 27,000, but they ended up using 53,000 kgs. Okay, so they've been able to save 1,000 kg. So from here, we know it is favorable. And that's why you need to come in and put favorable here. So this is favorable. All right. So we can conclude here by saying our... so you remember this chart? This chart. So we can say now that our material usage variance, we got that to be 2.5 favorable, but material price variance is $3,500 adverse. Okay, so another requirement could ask you to determine material total cost variance. So what you need to do is to net this off, the two figures. So adverse means minus. So it's just like saying 2,500 minus 3,500. So the net effect is going to be $1,000 adverse, because you have more of adverse than favorable results. So up here, this is the total material cost variance is going to be $1,000 adverse. Okay, so my next question for you is this. So what happens if the requirement just says material total cost variance? Would you be stressing yourself to do material usage variance, material price variance before you can get the material total cost variance? And then the answer to that is no. Just go straight to that part. So how do you do that? So imagine you have to calculate material total cost variance. If this is your requirement for 2 marks, so what do? You need to get your flexed result, which is standard actual. So this time around, it's not saying usage, it's not saying price, so it is the total. So that is why you need to come here. And you come in here, you pick the standard. The standard is $5. So let's drop that $5. So you have it here, $5. $5. You have to multiply by what? Let's go back to the cost card. You multiply by the actual units. So our actual unit from the question Actual unit is 27,000. So 27,000. Let's drop that in. So 27,000. I'll do that again. So this is 27,000. Please get your calculator and multiply this. So this is going to be 5 multiplied by 27,000. And this is 135,000. Okay, 135,000. Would this be dollar, units, or kgs? And the answer to that question is coming. The first thing here. So is in dollars. So you have this in dollars. What must you do now? You need to compare this with the actual dollar. Actual dollar. So let's go to the actual information. Our actual dollar is 136,000. So you have 136,000. So this is 136,000. Then find the difference. But just before the difference, can we interpret things? So the management expected you to spend $135,000, but you ended up spending 136,000. Okay, so you have overspent by 1,000, and that is going to be adverse. So this is material total cost variance. So you have it to be $1,000 advance. That $1,000 advance is what we got up here by netting off these two chappies. So this and this produced 1,000. So if the requirement says material total cost variance, you don't have to do material usage and material price variance first. So just go straight to the requirement of the question. And then I just demonstrated to you how to go about it. So this is it. All right. So we have even done more than what the two requirements ask us to do. So I had to do it this way so that you probably have your understanding reinforced regarding this concept. People that know me, my students, they know that I'm a lover of variances. Because my own way of doing it is not how the textbook will have put it. For instance, now the textbook would be we expect you to learn the formulas, different forms of formulas, and you get to the exam room, those formulas might be conflicting. But my way of doing it by asking you to put standard actual here is going to save you all of that stress. Okay, so there you have it. I need you to put your questions down in the comment section. And please, you sure have to encourage me by watching this online. That's on my YouTube channel. Please, I need you to watch it. If you are just downloading, it will not count the time watched for me, and then I'm afraid I could get discouraged from having more videos, because this time I'm spending on these videos, I could have used the same time for some other things. So please do well to encourage me by sharing, give it a like, and then please try and follow. And in case you are wondering how you can contact me for any of the ACCA papers, you need clarifications, there's a particular question that has been bothering you in terms of the solution, you do not know the rationale regarding the solution or the answer. Oh yeah, let's have a look at it. We could have a look at it personally, as in the two of us, or we could make a video out of it like this, okay, for quite a number of people to benefit from that question. But I will appreciate it if you engage me by putting your questions down. And the class notes, if you need me to send the class notes to you, everything, please put it in the comment section that you need a copy of the class notes. I can give it to you if you ask for it. Okay, so please, at this point, I'm going to be saying my bye-bye to you. But remember, you can reach out to me by WhatsApp. And the WhatsApp number is +234 803 385 1555. +234 803 385 1555. The email address is ayorinde.tt5097@gmail.com. I also hope to cover things like advanced variances, planning and operational variances, which I know it might be a concern for quite a number of students. But if you do not know the basic variances, planning and operational, you can almost be sure will be a problem, because planning and operational variances will break these basic variances into different components. The parts that the manager has control over, and then the part that the manager does not have control over. Okay, so depending on your responses, depending on the comments, I might decide to have more videos on variances, because this is just material. You have labor variances, you have sales variances, you have advanced variances, material mix and yield, planning and operational, sales mix and yield. And these are quite easy to understand if you follow my principles. Okay, so at this point, I'd like to thank you for your time. Thank you so much for your time. I'll see you in my next video. Thank you. Bye.